that, what are some of the penalties like, right? So like somebody gets audited, what's something that maybe by doing some of these things, like what are size penalties? I mean, does somebody get, from like IRS penalty? Is it like a slap on the wrist? Is it, oh, that's okay, I'm only going to get $500? Is it like 10,000, 100,000? Like give us some like just basic, like things you've seen for these businesses. Like what is something that could come by doing a mistake? What is the result like that could affect their business?
Well, let's go to the small stuff. Okay. Say they find a couple hundred or a couple $1,000s worth of tax adjustment. Depending on the reasons why you did it, and depending on how often you did it. In other words, is this a pattern of non-compliance or is it a one-time occurrence? Mm-hmm. All that's kind of factored in. But then you look at, some of the IRS penalties. Failing to file a tax return, including employment tax returns, can be upwards to 25% of the tax. Okay, that's just failure to file. Failure to deposit. Failure to deposit the taxes that should have been withheld and paid over to the IRS. Another 25%.
Wow.
Okay, now you're at 50. You can actually get failure to pay penalties, which can equal another 25%. If you go long enough, now you're at 75%. And then you're talking about interest, which is compounded daily on the tax and the penalties. So now you're looking at some tax bills that maybe start as $2,000 and they're suddenly $4,000.
Right. That's a big swing. That's a
It
huge
really
swing.
is. And that's only in the small amounts we're talking about. What if it's in the big amounts?
Right. And a lot of businesses, for the most part, when you get hidden surprises like that, I mean, that's something that can be, a real issue. Because I would assume that payment, like they don't do payment plans. Do they do payment plans? Is that money that's owed right then? How do they pay the IRS? If you find, like, if you owe $4,000, how do you pay them? Is it right then? Do they have the money right then? Or
what I can tell you, on a $4,000, they'll offer you payments. Yeah, they really will.
So they'll give you a little bit of break.
What they're not telling you is that you're paying penalties for failure to pay during that time frame and interest on those payments.
Right.
Most of which is probably more than what it would be as if you turned around and borrowed the money and paid the IRS.
Yep.
Because the penalties and the interest are designed as a deterrent to owe the IRS.
Right.
So obviously they're going to make it punitive.
Right.
So that's you want to avoid that type of thing. So yeah, you can make payments. If you had any ability to borrow, I'd tell somebody you better borrow the money. It's a whole lot cheaper.
Right.
Plus, if you default, who knows? You might get a lien filed against you, and you don't want that. But,
right. That's awesome.
There are also other ways. I mean, yes, they can work out payments. They can give you time to sell off assets. They can give you time to borrow money. Yep. I was in the collection, so inevitably that was people who would or couldn't, sometimes couldn't or wouldn't pay the taxes, and I had to go out and basically tell them how it was going to get paid.
Right. Yeah.
And some of that involved taking property.
Yeah, for sure. And if you have it, they're gonna do what they're due to get their money. That's for sure.
And there's also the offer and compromise route, which you can settle for 10 cents or so on the dollar. It's a very vague figure, but that's an extremely hard way to go to try to get your taxes absolved. So.
Sure. Now, I'm going to ask this question. I think we talked about it a little bit earlier, but I think a lot of people can learn from this. So one of my payroll clients had came to me and asked me the question where he owns a company and he's bidding on jobs, okay? Mm-hmm. And he knows he does everything by the book. So he's following the rules. He does not want to get in any trouble, right? So he has all his people on W-2s. They're all legal working people. And one of his competition is also bidding on jobs, okay? Well, he can quote cheaper because he's having illegals work there, right? Which is, again, is another hot button right now. Maybe we can go on that in a minute. But for this situation, he came to me and said, Corey, what do you recommend? How do I get my job cheaper? Because I have to pay everyone legally, and they're not. So really, two-part question is, do you see that with a lot of companies trying to go, maybe not going W-2 to 1099, but hiring the illegal people to do that? Is that something you saw a lot or not?
Well, in because I retired in 2012, we didn't see as many illegals being employed. but there was still a lot of underground economy going on. And what do you mean by that? Well, a lot of larger companies like that on a big contract were paying a lot of people cash wages
Yep.
or cash
Yep.
and not reporting them as wages and not counting them as employees.
Sure.
IRS is going to figure that out.
When they're going to see huge chunks of cash coming out every Friday
Yeah.
or every Thursday.
Yeah, and where is it going?
Right.
And you don't want to not claim those expenses because now you're you're going to be paying taxes on false income, and you don't
Right.
want to be doing that. So if you claim these contract labor that aren't contract labor, you're getting a temporary benefit, but now you've given the IRS some ammunition now because you've actually put it down on a return, signing under penalties of perjury, that this is accurate. But I think a lot of it is with this difference is that, okay, yes, somebody who is paying somebody off the books is being able to provide it cheaper, yes, but not legally.
Right.
And I had a client, I had somebody tell me that one time as well, wait a minute, everybody in the industry is doing it. I said, well, guess what? And then everybody else is going to be penalized as well. But here's the deal. You want to do the right thing and you know somebody's not, report them.